You're welcome to my channel. We are introducing another account called the manufacturing accounts, another topic. So we are going to deal with the manufacturing accounts. Since they're called manufacturing accounts, it means that they're prepared by companies that manufacture something. So in a firm which is manufacturing the finished goods from raw materials, the cost of production must be compared with the sales to find gross profit. So we prepare the manufacturing account to determine the cost of production. And what is included in the cost of production? We majorly have materials, the raw materials, then we have raw materials, we have labor, then the costs that are incurred in terms of labor, we have paying wages and then paying salary. Then we also have overheads. Overheads include those indirect expenses that are incurred. We have light and heat, we have rates, we have depreciation, and then we have insurance. Those are the indirect expenses. So cost of production mainly includes these three: materials, labor, and then overheads. So a manufacturing account is drawn up in addition to the trading profit and loss account, and it shows the calculation of the factory cost of production. So we prepare the manufacturing account to determine the factory cost of production. So preparation of a manufacturing account. A manufacturing account shows the cost of producing the goods that are sold during the period. So it is split into the following sections. We have two sections. We have the cost of the section of prime costs. Prime costs are direct costs of physically making the product. Then we have the section of overheads cost. These are other indirect costs associated with production. So it is mainly into two sections, prime costs and then overheads. And then when we add direct materials plus direct wages and direct expenses, what we get is the prime costs. All these make up the prime costs or the direct costs. Then when you get the prime cost plus the factory overheads, we get the factory cost of production. So that is mainly about the manufacturing account. In the next video, we are going to be having the formatting.